Hi and welcome back to the Property Punch podcast. We pour out real property talk for real people. I'm Thabo, your host, and with me as my co-host, as always, I have my dad, Washington.
Hi everyone, it's great to be back. Today's episode is a big one. We are breaking down how to unlock your equity and safely use it to multiply your property portfolio. We are breaking down how to unlock your equity and use it to build your property portfolio in 2026 and beyond.
That's right. If you've owned a property for a few years or even just owned one, you could be sitting on a gold mine.
Exactly. So equity is the superpower that can actually convert one property into 2, 3, 4, or even more. And today we're going to unlock that. So before we start our episode, how have you been, Thabo?
I've been busy but good. Have you been?
Yeah, very good. What have you been busy with?
University work.
Oh yeah, I've been seeing you sleeping odd hours of the night.
In the morning.
Yes. And are you in the middle of your exams or you finished or?
Exams are starting in a week.
Okay. And are you ready? Are you exam ready?
No.
No?
Not at all.
Okay.
In this coming week, I'm going to become exam ready.
Ah, great. Anyway, so I guess I'm sure you watched on the television that the Reserve Bank of Australia held the interest rates.
Yeah, I saw that.
Yes. You know what the current interest rate is at the moment?
I have no idea.
I think...
You don't know?
And I think it's probably 3.6%, but let me double check.
3.6.
Yeah, so I was right, 3.6.
So what does the number 3.6 mean to those that want to get into the property market?
So look, just probably a couple of years ago, interest rates have been going up, and we are quite confident now that they've eased a bit, which means they've stabilized. And this is really good news for those that are currently holding properties or those that are looking at getting into the property market. So what it means is the cost of borrowing is now lower compared to a couple of years ago. So which means it's now more affordable or to be thinking of getting into the property market. However, there's an issue of affordability because it's not going to be too long until we really see an upward shift in prices because more people can afford, which means there's now more demand. And with more demand, then that pushes up prices. So as usual, as always, if you are ready to get into the property market, if you can afford, if you've got a pre-approval, then the best time is now. Don't wait for anything because prices will start to creep up.
Interesting.
So when are you thinking of getting your first property?
When I have the money for it.
You've been saving?
Not for my property, no.
What are you saving for?
I'm saving for some music ventures.
Right, and travel.
Yes, and travel. I love traveling.
Yeah. Okay, cool. So look, let's get straight into what we're here for today.
Like you said, let's get started with what we're talking about today, and I think we should start simple. What is equity, and why does every investor talk about it like it's magic?
Equity in your property is the difference between the market value of your property or what it's worth minus on it. So I'll give you an example. If let's say you've got a property worth 700,000 and you owe 400,000 on it as a loan, then the equity is 700,000 minus $400,000, which is equal to $300,000.
So that's money you can technically access.
Sort of, but not all of it. So usually the banks will allow you to access up to 80% value of your property. Take away whatever you owe on it. So that is your usable equity. It's like having untapped potential sitting in your walls, waiting to be used.
I love that. Money in your walls. It's not just paper wealth, it's leverageable capital.
Exactly. So in 2026, and probably beyond, with stabilizing interest rates, and steady growth across key regions, equity is one of the most powerful tools that investors can use to scale smartly, not recklessly.
Okay, so we talked about what equity is, but how do you actually access it? What are the practical steps?
So step one, get a bank valuation on your property. You can't unlock equity based on guesswork. Banks or mortgage brokers will assess your property's value and borrowing.
So like a financial health check.
It is actually like that. So step two, speak to a mortgage broker. They will calculate your usable equity and whether a refinance or top-up would make sense. Step three, use that usable equity as a deposit on your next property. If you've got $150,000 equity, you can access that to put down as a deposit on an investment property worth $650,000.
That's kind of wild. You're basically using the growth of one property to help fund the next.
That's the game. But the golden rule is don't overextend. Just because you can access it doesn't mean you should use it all.
So we're trying not to max out every dollar of equity like it's a shopping spree.
Definitely not. Always leave a buffer. Equity should help you to leverage, not to drown in debt.
So that's how to unlock your equity. But what about timing? Because timing is very important when it comes to property, and I believe it's the same when it comes to equity too. So Dad, how do you know when it's the right time to access your equity? Because I can imagine that some people will rush into it and others might wait forever.
Spot on. Timing is everything. So here is my checklist that I use with my clients. Check that your property has grown between 10 to 20% from the date that you purchased it. Also check that your income can support another loan. Also check that your next property actually aligns with your overall property goals. And more importantly, make sure that you have built an emergency buffer and that your current loan isn't under stress.
So if someone's property grew from $500,000 to $650,000, they might be sitting on a great chance to leap forward.
Absolutely. But the key word here is strategic. We don't use equity just to say, I own more properties. We use it to build a portfolio that actually performs in terms of cash flow, capital growth, and stability.
So we've gone through all the theory stuff, what equity is, how to access it, and when is the right time to use it. But let's go and work through some real life examples to see how it's actually been used in a real context. So let's make this real. Can you share a story of a client who used equity to grow?
I've got a few that I can think of, but there's one that stands out in my mind. This is a story for Jason and Tatenda from Brisbane. We helped them to buy their first property in 2019 for $480,000. Fast forward in 2025, that property is now worth $720,000. So they refinanced and pulled out $160,000 from their equity. And they have used this to buy a jewel key property in Melbourne, Victoria.
That's a really smart move.
It is because this second property that they bought is actually giving them a weekly rental income of $1,050, almost covering both mortgages. And the best part, they didn't have to dip any savings.
That's the blueprint. Use what you already have to create new streams of income.
That's right, Thabo. And that's how property portfolio actually grows faster than savings ever could.
Our purpose here today is to help everyone watching succeed. And whilst we're telling everyone all the positives, we also need to let them in on some risks, mistakes, and myths. So let's talk about the other side.
Yes.
Dad, what are the risks of using equity?
So number one, and the most common one, is borrowing beyond your comfort zone. Just because the bank has approved it doesn't mean that it's smart. Number 2, poor investment choice. If you buy the wrong property, the wrong location, the wrong structure, it can just vanish fast. Number 3, no plan for cash flow. New loan adds to your commitment. So the property needs to pay for itself.
And the myths that are often heard all the time are, oh, I'll just wait until I paid off my loan before I start investing.
You know what? That's one of the biggest mindset traps. The wealthy don't wait until they've finished paying off one property. They use strategic leverage to grow whilst the market grows as well.
That's the smart debt strategy that you're always talking about.
I've spoken it so many times before. Property is a long-term game, and equity just helps you to play the game faster.
So with all that, let's prep for the future. The 2026 equity outlook and portfolio strategies. Dad, what are your predictions of what the 2026 landscape looks like for those investors that want to use equity?
We're now entering a more balanced market. Interest rates are stabilizing, valuations are consistent, and regional areas continue to show strong rental yields. So for smart investors, this means refinancing could actually unlock equity that they couldn't have done 2 years ago. And dual income and co-living investments are still delivering strong returns.
So 2026 is about controlled expansion, not just growth for growth's sake.
It is. Think of portfolio maturity, not property count. It's about using equity to create financial freedom, but not giving you extra stress.
This is my least favorite time of the day, but at least I'm going to share and talk about what equity is, how to use it, some great strategies in there too, and maybe help a few of you at home think about or consider using equity for growth. But let's wrap this up with a few key takeaways. Dad, take it away.
So here is my punch list. Equity is your financial springboard, so understand it. Number two, access it with evaluations and professional advice. Number 3, use it strategically for assets that pay themselves off. 4, always maintain buffers, so don't over leverage. And 5, always remember it's not about how many properties that you have in your portfolio, it's actually how they perform in that portfolio.
Those were such amazing takeaways, Dad. And for anyone listening at home, if you're sitting on property and wondering how much equity you could unlock, book a discovery call at yourwealthmentor.com.au. We
will help you understand your numbers and map out your next move in a safe, strategic, and sustainable way.
That's it for this week's pour of the Property Punch podcast.
Don't forget to follow, rate, and share this episode with someone who is sitting on equity but doesn't know what to do next.
Sip smart, invest better.